Greetings. This is the weekend. The markets are closed, which gives me an opportunity to really explain the approach that you've been seeing in videos over the past however many days. During trading days, I really don't have the time to really go into explanations because I'm with my Discord group and doing my own trading. But today, I can finally just take the time and explain everything. And especially because I received a comment on Thursday basically saying, did your strategy blow up or something? And actually, we've done very well on Thursday with the NASDAQ in our group. So I really want to take the time and explain everything, and then hopefully it will make sense. So to start with, every evening after 6 p.m. US Eastern, after Globex opens, I post levels for 7 futures markets. Obviously, most traders here do not trade 7 markets. I do, so I post levels for all 7. And then we have an indicator created by one of our members that simply plots those levels on the charts that you load. So this is the euro, for example. So from last night, well, from Thursday night, today's Saturday, but from Thursday night for Friday, there was a buy level, a sell level, and the midpoint for euro, and the same for the other 7 markets. Now, if we take a closer look, for example, in crude, right? So this is 6 p.m. These are the levels, buy, sell, midpoint, and above the midpoint, we expect a move toward the buy level. Another way of saying it, if let's say you are trading at this time, and you probably are not, but let's say you are, you would be looking for long setups because you are above the midpoint, looking for price to hit the buy level. So it happens, and now here is what might be sound a bit confusing, but I'll try to explain this clearly. These levels continue to affect price. In other words, when it's above price, it's pulling the price up toward it. But when price breaks through it, it continues to act on price, and about 8 out of 10 times there is a pullback back to this level. Another way of putting it, if I'm using the WST strategy, and let's say market opens up and price is here, I don't necessarily look for long trades. I'll probably would keep the strategy disabled because I don't necessarily want to take a short, but I am aware that this level will probably pull the price down. Once price arrives at a level, now I can activate the long side again because obviously I'm still bullish. Price is above the midpoint. There is a retest of a level, and now I am comfortable with activating the long side because I still expect a move higher. But again, as this move happens at this point, somewhere here, I am again a bit cautious because this level continues to act on price, and we have this pull down to the level and up. So here is the kind of the main point here. Yes, bullish above the midpoint for sure, but aware of situations where price, even though it is in a stronger position, could pull back. And I'm explaining it so I can get to what happened with the NASDAQ on Thursday. So one more example, this is gold, right? Again, 6 p.m. Eastern, the levels are posted, the indicator plots the buy, the sell level and the midpoint, and below the midpoint, here is the move to the sell level. So like here, I'm thinking short the whole time. If I'm using the WST strategy, I am thinking to enable the short side only for a move to this sell level. But just like we've seen in crude, only with the bullish side, right? Here is what happens with the bearish side. Price breaks through a level, but as I said, this level continues to act on price. First, pulling it down, but then when price breaks through, starts to pull it up. Here is the level. Okay, so uh, so even though we are below the midpoint, and you say, but wait a minute, you said below the midpoint you are looking shorts only. That is true when price is here going toward the sell level. Once price starts breaking below, 8 out of 10 times I expect a pullback back to this level, and that's what gold does. Breaks below, but then turns around. This level is now attracting the price up. First attracting it down, but then attracting it up. So it's not like at any point below the midpoint you can be short. If you try short over here, that would be terrible, right? But you need to be aware, and that's one of the things I discuss in Zoom in real time when it comes to the NASDAQ and the S&P. It is important to be very aware what happens once price reaches a level. Here, for sure, I am not thinking long at all. I'm thinking all short. But in this here, I can, if I'm aggressive, I can actually be considering a long to go back toward the sell level. Now later in the day, what happened with gold is price breaks through the midpoint, retests the midpoint, and goes straight up to where? To the buy level. So again, here, for example, if I'm trading oil, if I'm trading gold, I am thinking all long, just all long toward this buy level. But then again, it breaks through the buy level. Am I thinking to take a long here now? Now I got to be careful. Why? Because again, now a buy level first was pulling the price up and then pulling it down. Okay? So, even though we are above the midpoint, circumstances are everything. You know, it's like, okay, we are above the midpoint, but what is happening? We are now above a level that continues to act on price. Do I want to take a long here? No, because again, 8 out of 10 times I expect price to head back toward this buy level. So again, all this explanation is just to prepare you what I'm going to say next about the NASDAQ. This is NASDAQ on Thursday, 9:30 US session open. As you can see from the levels indicator, buy level, sell level, midpoint. So this is 9:30. This is where we are opening up. Now, I am right on the 465 sell level. As I said in Zoom, in real time, this 465 is extremely important, and I said if it holds, there is going to be a move back up to 490. This is a case, and it doesn't always happen, but in this case, 465 was an extremely important number, and I expected the price to move up. Now that it reached it, I expected the price to move up toward 490 and higher. So the members of the group were actually looking for long trades here, not short trades. There was a retest of this 465 a number of times. You see the importance of 465, and then a move higher. So we were looking for longs. Now, to be clear, below the midpoint, I was looking for short trades. I don't remember if I was actually trading it, but whoever was in our group was definitely looking for short trades to reach where? to reach the sell level. But now this sell level has been reached, and the 465 is just an extremely important number, and I made it clear first at 8 a.m., an hour and a half before the open, and then at the open, 9:30, that 465, if holds, should produce a bounce to 490 and higher. So, if you were more of a conservative trader, you would just be flat, not looking for any trades at all. The more aggressive traders would be looking for long trades, and at least for my suggestion, no one should be looking for short trades. Even though, could a short trade work out? Maybe, I don't know. I did not try short trades, so I don't know. But I was definitely looking for long. I was looking for the 465 to be tested and then hold, and for a move higher to happen. Is a sell level always an opportunity to buy? Absolutely not. No. In this case, it was, because the price of this level was 465. That was the importance. I'm not going to get into it here why it was so important, but 465 was very important. And let me show you a proof why, by the way. So this is Thursday, right? Look where the market closed on Friday. This is Friday's close, 465. It's not magic, it's not voodoo, it's not Fibonacci, it's not point of control or market profile or any of that stuff. It's just understanding what is it that the market wants. There is no coincidence. There was no coincidence here that the market closed at 465. After being above it, after being below it, it closed at 465. So to summarize, yes, below the midpoint, I'm looking for shorts, and above the midpoint, I'm looking for longs. But we need context. If, after being below the midpoint, the market already reached a sell level when we are ready to start trading, or even below the sell level, there are some circumstances where we should no longer be looking for shorts. Targets on the bottom have already been achieved. Again, I provide that information in real time in Zoom. It's just everything must be in context. Yes, above the midpoint, right? Above the midpoint, I am looking for longs, for price to come close to or hit or go beyond the sell level. I'm sorry, the buy level. Here it is, just missing the buy level here. But once this happens, again, the conservative trader would not be attempting shorts. Absolutely not. If you are more aggressive and you see price coming to a buy level and then getting rejected, the aggressive trader might try a short, by the way, toward where? If you are taking a short, if you are an aggressive trader and you're trying a short using WST, where would that short kind of target? The midpoint. The midpoint. Okay? Bounce, right? Fooling around the midpoint. So anyway, there is quite a bit more to it, but just wanted to kind of make this video to really explain, because I don't have the time during a trading day to really go into this. I wanted to take the time on this Saturday to really explain why sometimes when market is, let's say, below the midpoint and I'm anticipating weakness, why would I look for the long side? And it's all about context. If you are below the midpoint, price already reaching, let's say, the sell level, this is a target. This is a target from the midpoint, okay? Like the midpoint would be a target on a short from this level if it fails. It's all about context. So hope that helped. My email is in the description. Email me with any questions. Leave a comment. Thank you, everyone, and talk to you next time.